Welcome to another in-depth business analysis. Today, we're going to peel back the layers on a financial data powerhouse that in many ways operates in plain sight, S&P Global. We're going to go way beyond the one index everyone knows to really understand the machinery that makes this business tick.
All right, before we jump in, the usual but very important disclaimer, this is all for informational purposes. It is not and should not be taken as investment advice.
So, let's get right into it. You know the S&P 500, right? I mean, who doesn't? It is the US stock market benchmark. But what about the company behind the index, S&P Global? Well, that's a whole different story, and it is way more complex and fascinating than you might think. So what exactly is this company?
Here's how we're going to break it down. First, we'll look past that famous index to see where the real money is made. Then we'll dive into their ratings business. It's a powerhouse. After that, we'll uncover a hidden gem, their commodity engine. Then we'll look to the future, which is all about data. And to wrap it all up, we'll connect the dots with a concept called the S&P flywheel.
All right, first up, let's unpack where the money actually comes from. And trust me, this is where what you think you know about S&P Global gets turned on its head.
Okay, take a look at this. This is the first big aha moment. You see that little slice for indices, the home of the S&P 500? Yeah, that's just 8% of their revenue. Crazy, right? The real heavy hitters are market intelligence, pulling in a massive 39%, and their original business, ratings, at 30%. This chart alone completely reframes how we need to look at this company.
So, let's talk about that ratings division. It's not just the number 2 segment by revenue. This is the very foundation. This is the bedrock on which the entire S&P Global empire was built.
So what even is a credit rating? Well, think of it like a report card for debt. It's a score that says how likely a company, or even a country, is to pay back the money it borrows. And here's why it's so critical. A better grade means you pay less in interest. It's that simple. These ratings are an absolutely essential cog in the machine of the global financial system. Without them, borrowing money would be a lot harder and way more expensive for basically everyone.
And the industry itself? It's a textbook oligopoly. You've got the big three, S&P Global, Moody's, and Fitch, and that's pretty much it. They're protected by this massive regulatory moat. See, the SEC gives out this special designation. It's a mouthful, Nationally Recognized Statistical Rating Organization, or NRSRO, and it creates these huge barriers to entry. It's almost impossible for a new player to break in. This structure has allowed these agencies to keep their grip on the market for over 100 years.
Okay, now for a part of the business that flies completely under the radar for most people, but oh man, is it powerful. We're talking about the Commodity Insights Division, better known as Platts. This is the unseen engine that literally prices the world's natural resources.
Just let this number sink in for a second. 60%. 60% of all crude oil that's shipped across the world's oceans is priced using a Platts benchmark. That's not just a big market share. That's being woven into the very fabric of the global energy market. It gives them an unbelievable amount of influence and pricing power.
And the scale is just staggering. Every single day, Platts is cranking out more than 15,000 different price assessments. We're talking oil, natural gas, metals, you name it. If you're a trader or a big company in these markets, this data isn't optional, it's not a nice to have, it is an absolute necessity to function.
This quote here from an investor letter just nails it. It says, S&P Global has become an unavoidable data and research partner. Think about that phrasing, unavoidable. When your customers literally cannot do business without you, well, that's the definition of an incredible business moat.
And that brings us right to the future of the company. The acquisition of IHS Markit wasn't just about bulking up in commodities. No, this was a massive, strategic bet on becoming a full-blown data and analytics powerhouse. And you can bet that things like AI are a huge part of that plan.
I mean, the transformation is just night and day. Before the deal, you'd say, oh, S&P Global, they do ratings and indexes. But after that $48 billion deal for IHS Markit, it became a totally different beast. A true integrated information services giant with all this incredible new data on everything from the auto industry to global shipping.
And their financial targets? They tell the whole story. They're gunning for organic revenue growth north of 7% and, get this, an adjusted operating margin of almost 60%. Let me put that in perspective for you. Margins that high are like unicorn territory. You usually only see that with the most elite software companies. It just speaks volumes about the quality and scalability of their data business.
Okay, so we've got all these super powerful but kind of separate looking businesses. How do they all fit together? Well, this is where the real genius of the business model comes into play. It's what we call the S&P flywheel, a beautiful, self-reinforcing ecosystem.
Here's how this machine works. Step 1. The core businesses, ratings, commodities, mobility, are constantly generating massive streams of proprietary data you can't get anywhere else. Step 2. The Market Intelligence Division swoops in, takes all that data exhaust, packages it up, and sells it. Step 3. They then use this treasure trove of data to power those world-famous benchmarks, like the S&P 500. And then, here's the kicker, Step 4. The power of those benchmarks strengthens the S&P brand, which drives demand and pricing power right back to the original businesses. It's a perfect circle. Each piece feeds and strengthens all the others.
So if you take away one thing, let it be this. S&P Global's competitive advantage, its real durable moat, isn't just one thing. It's the entire ecosystem working together. It's their unique data combined with benchmarks that are so deeply wired into the financial world, in contracts, regulations, and trillions of dollars of products, that ripping them out is almost unthinkable.
And that leaves us with one final, pretty mind-bending question to think about. When a single company's benchmarks are the standards the world uses for stocks, for oil, and for credit, are they just reporting on the market anymore? Or have they, in a very real way, become the ones who actually define it?